When I started trading, I used to take trades following what I had learned, but they would end up failing once I entered the trade. It wasn't until I realized I was missing 3 simple steps that I was finally able to start growing my account from $50 days to even $1,000 days. In this video, I'll be showing you a repeatable process you can use to find high probability setups so that you can increase your win rate. So what is the main problem here? Have you ever been in a situation where you have all the conditions to enter a trade met, but then you enter the trade only for this to happen? It reverses and you get stopped out and you lose money. You're probably like, but here it wasn't really clear. It was shopping around. Okay, fine. You have a clear trend towards the upside and you look to take a trade. All your conditions are met. And then the same thing happens, and at this point you're frustrated and you're happy because you thought you learned something and it was pretty simple, but you just don't get the results you're looking for. Now, the problem is that most people explain how to enter trades on lower time frames, such as the 5-minute time frame or the 1-minute time frame, without helping you put all the pieces together. And I found that this caused a lot of problems. So I decided to make this video to show you the full process, the full picture, so that you can have conviction in your trades and take better setups. Now, why do you want to use this strategy? Because it would remove the guesswork and filter out those low probability trades. It can literally be the difference in your win rate. And you know that having a higher or better win rate, a tolerable win rate, affects your confidence. You want to also stop overthinking. You want your setups to be as clear to you as possible, so you take it without hesitation. Number 3 is in 3 simple, repeatable steps that I'm going to go over, and you don't want to miss any step, because if you watch only step number 1 and then you don't watch step number 3 and step number 2, you will not be able to execute the trades and see the results that you're looking for. Now, what is step number 1? You want to go to the daily time frame. And what are you going to ask yourself? What is the trend? If you cannot answer the question, if it's showing you that it's an uptrend and it's clear, your bias now is upside trades. But how do you enter the trades? I'm coming. Step number 2 will reveal it. So do you now move on to step number 2? If you're in a downtrend, your bias is to the downside. You now move on to step number 2. If it's choppy and it's just not clear, it's indecision, because the market moves from trend to range and then trend again. When it's in the state of range, it means indecision. It means it's pausing, it's slowing down. You want to do what? Leave the stock or ticker, leave it alone and trade something else. Now, step number 2, you want to use market structure to determine your key levels. So you go to the 1-hour time frame and use market structure to create your game plan. I create my game plan every morning using these simple steps, and I share it in my free Discord. Now, if you're in an uptrend, you want to be seeing higher lows and higher highs clearly on the charts. And until this higher low that you have that has formed here, the most recent higher low, as long as the most recent higher low is still intact, you shouldn't be looking for downside trades. It's going to be lower probability and tougher to trade, because you'll be trading right into demand and support, and you could easily see those reversals that I showed you earlier. Same thing, if you're in a downtrend, you shouldn't be taking upside trades as long as the recent lower high is still intact. What that will lead to is you trading into a resistance, and then you would then get stopped out and it would end up making a lower low. Now, once you have this picture together, you move on to step number 3. Step number 3 is where most people are taught. Plan your trade and wait for the setup to appear. This is where you're looking for your entries and your exits on the lower time frames, such as the 1 minute or the 5 minutes, and you are trading maybe the previous day's high and low break and retest, which I'll be showing you in an example, going over the steps from step 1 to step 3. And then you might also trade the opening range breakout or key support and resistance. Regardless, you need to go through step 1 to 2 before you get to this point. Most people don't understand even what they're looking at on step 1 and step 2, and they just go right into trading the setups. And that's where the mistake comes from. Now I'm going to go over examples step by step so you can put all of this together. So step number 1, what is the trend? Clearly, we can see based like since April, we have been in a clear uptrend on the daily time frame. Now that we're able to answer the question, what is the trend, we want to move to the hourly time frame where you can then do your analysis on market structure and get your key levels. If you have a hard time seeing and looking at candlesticks, you're a beginner, you don't really know what the trend is, you can go from candles to line and you can easily be able to tell you this is an uptrend. Now switch back to my candles and you can see that we had this low, we made a new high, we made a higher low, higher high, and then another higher low. And like I said earlier in step 2, until the most recent higher low is broken, it's better for you to just look for upside trades. Those will be the higher probability setups. So now you mark that key level, that low, and then you look at the high here. What is the most recent high? This was the high of day on this Thursday. You want to mark it out as well. 736.13 is the level. So you want to mark out 736.13. And what would I be looking for? Based on the trend, I will be looking for a play that would do something like this. Move up, come down to retest this level, and then continue higher. Now that I have this all mapped out, like I said, step 2 is to look at market structure, understand what's going on the chart, and create your game plan. You don't want to skip this step because you cannot be doing step 3, which I'm about to show you now, without understanding what is going on the higher time frames. So now you move down to the lower time frames and we want to focus on setups because we are looking for upside trades. Now we can now look at our setup playbook. We could easily trade the previous day's high, break and retest. We can trade the opening range break and retest. We can trade key level break and retest as well. Key level break and retest. Key level, yeah. So we have 3 options that we can, depending on what shows up on our chart. So now I'm going to play out the tape and we're going to see what ends up showing up on the chart. So now coming into the day before the session, you see that we've marked out the high. This is the previous day's high. So now we're going to be looking to see if we get the previous day's high break, retest, until we see continuation before we take a trade. I'm going to just play it out and show you what happens and walk you through how you should have entered and taken the trade. So I ended up playing out this tape. You can see that we struggled here to break it, and then we ended up breaking above the level, and then we spent some time playing around. We didn't quite retest the level, as you can see, and then we pushed higher, but we eventually came back down, retested and touched the level, and we saw buyers step in. At this point, it's showing that buyers are stepping in and you want to then look for an entry. You can enter the trade when that candle closes and you look for a 1:2 risk to reward on this trade. Or you just target this high as a 1:2, it's fine, and you look to take the trade. It's simple. It's the same things I explain every day in my videos. You see indecision at the level, you see a candle that is green and strong that covers the price action, then you take the trade and manage your risk. As you can see, this trade hit your 1:2 profit target. Eventually, during the day, it ended up playing out and testing these highs. But if you wanted to still hold until you got to this highs, you would have gotten your target as well. This is just an example of how you start from the daily time frame, you build your thesis on the 1 hour time frame, And then you go down to the tiny small time frames like the 1 minute or the 5 minute to look for your entries and your exits. That's the proper way to do it, not just watching the 1 minute or the 5 minute time frame to take trades. I hope this was clear and this helped you understand what you were missing out on. Try it. Let me know how it goes for you. If you have any questions, please leave them below. I appreciate you for watching this video to this point. Thank you so much, and I will see you on the next one.